And we are back. We are back for another edition of the Economics and Precious Metals Report. I'm your host, Jake Fox. This is Black Tower Radio. We are broadcasting live on 1040 AM, 92.1 FM, WYSL in Rochester, New York. Also on World News Radio .today. That's World News Radio .today. And we are joined here by our regular guest, Turd Ferguson of TFMetalsReport.com. That's TFMetalsReport.com. Go to TF Metals Report to get interesting nuggets that you don't really find anywhere else. You know, not many economic sites or any sites are putting up just like what he did today, a must-see video. A few moments ago on Fox Business Channel, we heard someone proclaim that given all that's going on in the world, gold should probably be $5,000 to $6,000 per ounce. You know, not many people are on the ball like Turd is, updating his site for stuff that you should be seeing. And that's why we bring Turd to you once a month. Thank you very much, Turd, for coming back on the show.
Hey, Jake, thanks for the kind words. It is always fun. I can't believe another month is in the bag, and here we are talking again.
Another month down into our eventual demise, probably.
Exactly. We're a month closer to the grave, my friend.
But, yeah, let's discuss this video. The CEO of the Chicago Mercantile Exchange went on TV and said this out loud, which is pretty amazing.
Crazy. Look, first of all, how often does gold get discussed on Fox Business News or Bloomberg or CNBS? All right, maybe once a day, and then usually it's in the context of, oh yeah, it looks terrible, you got to get out of it, right? Then occasionally, every once in a while, Bernie Lowe on CNBC Asia will have Chris manipulated. But that's about the only time you'll ever see him on TV. And you're going to get somebody to speak positively about gold, and then to throw out a number of $5,000 to $6,000 an ounce. I mean, I would just be floored if you told me that happened. And then if you told me that it was the CEO of the CME Group, which is the Chicago Mercantile Exchange. CME Group actually owns and operates the COMEX exchange in New York, where gold is traded, where all the paper gold is traded. So here's the CEO of the parent company of the dastardly evil COMEX, where paper gold is traded. And here he is on tape saying that given all that's going on in the world, after you adjust gold for inflation and all the different risks, it should be trading at $5,000 to $6,000 an ounce. Man, I about fell out of my chair. I still don't know exactly what to make of it.
So he goes on TV and says that gold is being suppressed on his exchange.
Yeah, more or less. He's incredulous by the price. Yeah.
That's incredible. And I mean, I'm assuming there weren't many follow-up questions.
No, it was the last question of the segment, and then that was it from there. I mean, at least the host asked about gold. That was kind of fun. Like I said, that doesn't come up more than maybe once a day on those business channels. And then to have, I mean, they could put me on there, and I'd talk about $5,000 gold, and I'd be laughed off, and they'd be, oh, he's just a goof, conspiracy nut or something. But to have the chairman, the CEO of the CME Group, which is the owner and operator of the COMEX and a bunch of other exchanges.
Yeah, that's incredible.
His quote, he said, it should be, given all that's going on in the world, you'd think it'd be trading at $5,000 or $6,000 an ounce. Why in the world would this guy say this? You know, you just don't have interviews with a very huge company, important company CEO, and not have the questions at least scripted or have him know ahead of time what they're going to talk about. I mean, it's not just like some off-the-cuff conversation like you and I are having, right? So for him to say that it makes you wonder. You know, I've got a good friend of mine that lives in England that has been just talking for months now, the last couple of months, that he thinks for sure that this current pricing system, you know, using these futures contracts is about to blow up. and that all due to physical gold demand. And maybe he's right, and maybe in a sense the chairman of the CME is trying to front run it, so that if this were to actually happen over the next couple months, Neil Cavuto could have him back on and say, hey, how about this, Terry? It was just back a couple months ago you said it should be $5,000 an ounce, and here we are. And it looks like a normal course of business. I don't know. Yeah, I mean, this is all speculation on my part, but boy, oh boy, to hear somebody say $5,000 or $6,000 an ounce on Fox Business News, that's one thing. Then to hear it come from the head of the CME Group is something entirely different. That's for sure.
So if gold went to $5,000 or $6,000 an ounce, what would that do to the dollar? Well,
see, that's all part of it. You don't know really what the impact would be. You don't know what the impact would be on the exchanges. You don't know what the impact would be on the banks that make a market in these derivative contracts that set the price. I mean, they're at great risk if that happens, a great financial risk. Would it be a big deflationary event or a big inflationary event? Would it be good for countries like China and actually for the U.S. in terms of their foreign currency reserves to revalue gold 4 or 5 times higher? It's something that hasn't happened in anybody's memory. I mean, the last time gold was revalued higher, if you will, it went from $20 an ounce to $35 an ounce back during the Great Depression, because that's where the price was pegged. And then after that peg was taken away, the Bretton Woods peg of 35 in the late 60s, it's been free floating ever since. So we haven't had that big of a move in decades. So it's really hard to say how all the dominoes might tumble into each other should something like that happen.
All right.
Now, but Jake, I should say, at some point it's going to happen. Whether it's imminent, whether it's going to happen in the next couple of months, this entire pricing scheme is controlled by the banks, and price is determined not by the exchange of physical metal, where you say, hey, I've got an ounce of gold. What will you give me for it? And I say $1,200, and I give you $1,200, and you give me an ounce of physical. No. The price is determined through the trading of these futures contracts, which have no connection to the physical at all. And they're supplied and created from thin air by these banks. There's no gold that's mined that supports these things. They're just these derivative pieces of paper that are swapped back and forth, and then the physical price is set to that paper trading price. It's obscene. So that system's not going to continue anyway. That reset is coming. We just don't know if it's imminent, and whether this CEO, Terry Duffy, of the CME Group is just trying to front-run it with his comments today.
Next up is this article, which has an awesome title. Mother Mumbles Merciful Mutterings. Just as we had hoped, a dovish turn from Mother today has peeled back the U.S. dollar, Japanese yen from its recent highs. This in turn has allowed COMEX Digital Gold to move back towards 1220. So what is going on here, Terry?
Well, Mother, as we call her at TF Metals Report, that's Janet Yellen, chairman of the Federal Reserve. She's a grandmotherly figure, right? I think she's only 5 feet tall, so it's like she's this little Tom Thumb little thing that waddles into the room. And looks like your grandmother, right? More or less. So we've called her Mother forever, not disparagingly in a sexist way or anything, but I mean, that's just who she is. So she's Mother. And Mother today, she's been on this path of increasing the Fed funds rate, which is the overnight rate for interest rates from the Federal Reserve to the banks. It's the shortest rate possible. It's the only rate over which the Fed has some control. And she's been raising that interest rate this year, trying to do God knows whatever she's trying to do. And she just raised it again 4 weeks ago. And everybody was expecting at least one more of those rate hikes this year and several more next year. And she began to walk that back today in a recognition that, of what we all know. I mean, the U.S. economy is just stuck, going nowhere for a number of reasons that we can get into if you want. And there's really no economic justification for suddenly, oh, boy, we got to start hiking rates or this economy is really going to take off and inflation's going to take off. None of that's happening, but they're hiking rates anyway. And so she acknowledged today that they really probably don't need to do that too much more. That, again, helped gold move higher today, and that's what her mutterings were about.
Well, regarding what you said about sexism and labeling public figures, I would say no one really cares about sexism or homophobia or any of that. There are some people who care if it's done to people they admire or them.
Yeah.
And you can see it today in our politics where the left is painting the Putin-Trump relationship as some sort of homosexual relationship.
Yeah.
You know, that's fine. You know, they can do that because they're not homophobic, apparently. You know,
Right.
it's okay to label their relationship a homosexual one, and that's like some sort of negative thing. And they can also, you know, call you use sexist remarks regarding conservative women and all of that. That's okay too. But as long you can't do that stuff to, you know, Hillary or Chelsea Clinton or anything like that, because then you are sexist or homophobic or whatever.
Yeah.
That's my little rant for today. But,
no, and you're dismissed out of hand if you do, and they try to diminish what you're saying. No, look, the mother felon, as we call her, she should be a subject of open derision. In fact, she should be in jail. Frankly, all of the Fed goons should, for what they've done to this economy, the great, incredible inequality that they've created not only in wealth but in income. Lay it all at the feet of the Federal Reserve System and these Federal Reserve governors that are there to serve and help the banks. At the end of the day, that's why she's raising these rates, because it allows the banks to capture more interest spread. It allows the interest on what the Fed pays the banks on excess reserves to go up. And when they print money in QE or in TARP or all these other programs the last 10 years, when they're printing money, they are stealing from you, they're stealing from me, because they're devaluing the current money supply, which is a devaluation of your savings and my savings. They should be jailed. They are criminals. The system has to go. And so, anyway, that's my rant. I try to be nice and talk about Mother, but she's a criminal. And she should be on trial just as Jamie Dimon should be on trial, just as Lloyd Blankfein should be on trial, just as this Terry Duffy character should be on trial. If it was up to me, I'd be that guy in that last Batman movie. Bane was the bad guy. What was that dude's name? Anyway, he sat in the mock trial, you know, and it was exile or death.
Yeah.
Right? Was your choice. I'd like to be that judge, and I'd like all those people put in front of me, and I'd like to rule. But unfortunately, I don't have that power.
Me too. I would love that. That would be fantastic. When they talk about normalizing these interest rates, what do you think they mean by that?
Well, what they mean by that is some historical norm. You go back, you can pull up charts. I remember back when I was a stockbroker. I mean, it was typical to have a 30-year Treasury bond at like 6 or 7 or 8% interest. You know, you got to have a high interest rate for a 30-year commitment because you got to fight inflation that whole time and that kind of stuff. You know, a 10-year Treasury note might yield 4 or 5%. You know, something like that. Well, ever since everything died back in 2007 and 8, we've had basically zero interest rate. On the short end, it's been zero. Anybody's tried to save money as a savings account or, you know, hold CDs, they know what I'm talking about. Just crushing, absolutely annihilating senior citizens that depend on safe, guaranteed income to supplement their retirement income. Well, you know, the Federal Reserve drives its interest rates to nothing, and now a CD, you know, 1% for 5 years, that kind of thing. When the Fed is talking about normalizing rates, they're talking about having rates go back to those historical norms, which ain't going to happen. I've said this as long as there's been a TF Metals report. Then people try to say, you always said rates couldn't go up, but look at Mother, she's raising rates. Well, on the short end, but while she's been raised the short end by 1 full percentage point, the long end has gone down. It was just 4 months ago that 30-year bond, like I said, used to yield 8%, was 3.2, right? Now it's 2.9. It's going down, not up. And the reason it can't go up is because primarily all of the existing debt, most importantly at the federal level, Jake, we've got $20 trillion in current federal debt, right? And the only way that the federal government manages that without a budget, remember, is the interest on that existing debt has been moved all into the shortest term of bonds with the lowest interest rate possible, so that the interest on the national debt currently is only like $350 billion a year. Okay, and that's because interest rates are so low. But if you normalize interest rates, they go back to where they were, normally 10, 20 years ago. The interest just on the current debt now would double or triple. All of a sudden you'd be paying $800 billion a year, $1 trillion a year, just simply in interest. And your federal budget deficit, guess what? It's only $600 billion now. Well, if you add an extra $600 billion in interest payments every year, you're at $1.2 trillion. And the thing just begins to just rapidly swirl around the drain and spiral to nothing, to death. And so this notion, it is what a massive, anybody that says, yes, rates are now going to be normalized is either selling something and trying to scam you, or they're totally clueless about how things really work. There's no normalization. That's ridiculous. But in this notion of trying to make this Goldilocks, thing where everything's fine, yeah, go out and buy a new refrigerator because everything's wonderful, they try to tell you that that's the next thing that's coming. It's a lie.
Do you think they have any idea of the interest rate threshold where it will cause chaos, or do you think this is just a guessing game for them?
Yeah, I don't know. Mother actually muttered that today. There was one of her headlines during her testimony. Every 6 months, there's an act of Congress called the Humphrey Hawkins Act from decades ago that says every 6 months the chairman of the Fed has to show up before the House Financial Services Committee and then the Senate Banking Committee or whatever the hell it is tomorrow and give this testimony about how things are going. And so that's where she was today. And she actually said, it made a headline of, the current path of debt is unsustainable. Really? You think? $20 trillion and growing by $1 trillion every year? And then you've got all of these unfunded entitlement programs and this health care that's a disaster, and so goodness gracious, of course it's unsustainable. And it begins to grow exponentially. It's like if you say you're to pay that off, you go open it, you get a thing in the mail for a credit card with a $30,000 credit line. You're sweet. So you roll your $20,000 into that, and now you're at a $30,000 credit line. And so and you just keep on spending. You buy some more stuff. Now all of a sudden you got a $30,000 credit card debt. Then you get a thing in the mail that says buy $50,000, and you go, okay, sweet, I'm going to roll it. Well, at some point, man, you don't have the cash to service that debt anymore, and you're just bankrupt. Well, now U.S. isn't necessarily going to go bankrupt, but what does eventually happen, as we've seen in the last 10 years, is the Fed just simply creates money from thin air and buys the bonds themselves. That's what the Japanese government is now doing. That's where we stand on the verge of the European Central Bank doing that. And when the Fed bought $1.4 trillion worth of Treasury bonds between 2009 and 2014, that's what they were doing as well. More of that is guaranteed in our future at some point. And that begets a loss of confidence in the financial system, loss of confidence in the dollar, and then the whole system quakes and goes in places where nobody can predict. And that's all part of what we talk about at TF Metals Report. That's why, regardless of what the price that you see on TV of gold and silver, regardless of what that's done for the last couple of years, you just got to keep buying some on a regular basis and stack it, because it's your only financial protection against all of this craziness that is definitely 100% guaranteed is still coming.
Is that a normal thing for a Fed chairman to say, that this debt cycle we're on is unsustainable? I mean, I don't remember Bernanke or Greenspan saying something that alarming.
Yeah, you wonder how close we must be to the end, Jake, to get to the crux of your previous question. Because, When Greenspan was Fed chair, we had $5 trillion in debt, and when Obama took over, we were at $10 trillion for total national debt, and that was Bernanke, and now we're at 20. So, yeah, maybe we are getting closer to that exponential point where the debt can hardly, be serviced anymore without just openly printing dollars. And so, yeah, maybe we're getting closer, and that statement of hers today was a clue.
So this looks to me like, all of these things we've talked about on the show today. I mean, if you were a person that just listened to this show, you'd be like, this country, and say you were an alien that came down from space and just listened to the show and what we were talking about and took what we were saying as fact, you would think, wow, that country is soon to be in a whole world of trouble. That country isn't sustainable. That's where we are now. We're at an unsustainable point.
And that's absolutely right. And an alien that just landed, as you said, would recognize that because they're not biased through their own personal history. It's really hard, Jake. It's almost a part of human nature to imagine something that you've not seen happen before, right? I mean, there's nobody alive really anymore. I can guarantee you there's nobody listening to us this evening that remembers a time when the U.S. wasn't, at least one of two global superpowers, when the U.S. didn't have the economic superiority over the planet, that the dollar wasn't the reserve currency for all global trade. I can promise you there's not a single soul listening to us right now that remembers a time when that wasn't the case. And so therefore, it's just human nature to assume that it's always going to be that way. Well, why would sun comes up in the east every morning. I've never seen it come up in the west, so therefore it's just always going to come up in the east. Maybe that's not the best example because it is always going to come up in the east. But the idea is if you have never had experience with a change before, then it's really hard to imagine it. And I think that's the problem with most folks. They're mind numbed and they're wrong to the point of being addle-minded by the incessant media message that is pounded into them. Just stay asleep, don't pay attention. We got this all under control. It is now more than ever. It's incumbent upon everybody listening to you and I to do their own research, trust their own instincts, educate themselves about what really is going on, not only in the U.S. but in the world, and then take action. Prepare for these events, these changes that are coming, because at the end of the day, what good does it do for you to be smart and wise and alert if you still end up on your roof after 3 days with a sign saying, "Rescue me," right? You've got to see the hurricane coming and make your preparations ahead of time and then be ready to act when it hits. And that's what your show is about, and that's why I'm glad to be on it every month.
Thank you very much, Turd, for coming on every month. Everybody go to tfmedalsreport.com. All of the analysis, all of the ideas, all of the commentary you get at tfmedalsreport.com. Not only do you get his analysis in a written form, but you also get a very nice podcast that he does. It's an excellent site. As you know, Turd is a very, very smart and astute man. That's why, again, we have him on the show. Thank you very much, Turd, for coming on the show today, and talk to you next month.
All the best, my friend. Keep the faith.
Thank you, sir. And that was another edition of Black Tower Radio. Tune in next week when we'll have more of your favorites from alternative media. I'm your host, Jake Fox, signing out, and I'll see you next week, Wednesday, 5 p.m. Eastern Time, right here at worldnewsradio.today. That's Wednesday from 5 to 7 p.m. Eastern Time, right here on worldnewsradio.today on the internet, and at 1040 a.m., 92.1 FM, WYSL in Rochester, New York, on terrestrial radio. So, we will see you next week. Same place, same time. Good night, everybody.